Good morning, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Monday morning, February 3rd, first trading day of the month of February. And we're looking at the last couple of days of the market profile of the SPY ETF here on Window Trader. So, a couple of things to start with. We went out with a price probe to the downside on Friday. So, continuing the theme all of 2019 and the few we had this year so far, the downside price probe right now, with just over an hour to go, is being firmly rejected. Right? That's been the common theme. So that's one bit of good news for the bulls as that continues. Second, after a day with such a wide range that we had on Friday, trend day down, the odds of consolidation are pretty good the following day. And that's what we're seeing right now. For the past hour or so, we were trading at a very, very visual point, which was the afternoon rally high from Friday of K's high. Now, in the last couple of minutes, they've tried to take this higher to where the trend day started with the single prints. Remember, any trades we do early on, if they're in value, are not as high risk reward as they would be above or below value. There's no surprise we're going to get some chop in this market in A period because of the wide range we had on Friday. All right, so destinations. Well, right now, with an hour to go, the price probe, which would have been your first upside one of 321.51, seems to be getting soundly rejected. Then we have the afternoon K's high, which is still in play right now because there's an hour to go of 323.23. Then the two sets of single prints. First one started 324.35, get filled at 86. So that's a fairly large one of 51 cents. Second one starts at 324.95, gets filled at 325.43, 48 cents. So both sets of single prints are decent size. So we're going to see if we're going to pick up sellers today if we get to that level as we did on Friday. Above that, the all-important HAP of 326.40, and then Friday's high of 327.17. For the downside, until we get more market-generated information, we don't have anything until Friday's low of 320.74, which is a weekly low and $3 lower from where we're trading right now. And then we have the other two important ones, 320.36 monthly low and 320.15 weekly low. So again, like I said on Friday, that's really the last line of defense for the bulls, I think, around that 320 level to hold with the longest time frame and an intermediate time frame coming into play. So if we get back to those levels, very, very important. Remember, we firmly bounced off the 50-day moving average the first time there by $1, and now, once again, we're getting higher. Now, just like on those other days when we rallied after gaps down, question is, are these just relief rallies or a buy is trying to really step it up? Game plan for this morning. Imbalance in value. If we are to get, if we're opening firmly above the afternoon rally high, I'm going to wait to see what happens around value high from Friday and the single prints. It's a good area to take a put play for a couple of reasons. They'd be trying to come out of value to the upside, and we're going to be in a very visual spot where there were sellers on Friday. So I would start a put play around value high and the singles, even add into them into the second set of singles. If those get filled, then I'm out of the trade, and then we're going to have to reassess to see if we were to get up to the highest accepted price. If they don't get filled and we hold, then odds are you're going to trade back down to where the POC was. Even though it wasn't that wide, you would probably trade back to it and the top of the afternoon rally high. So that would be my put play. As far as a call play, it would have to wait, I believe, until we get more information in a period, because I'm not going to take a put play up here, even if we're to fill these single prints, until we get something more where we establish higher value or at least overlap into higher and one time frame up. This HAP is pretty powerful for me, so it'd have to get above that. If we're to drive down initially, get support somehow at the afternoon rally high now, or dip below it and come above it and find some buyers, again, you can take a call play, but you're going to be in value, and you really have nothing until you get more market generated information to the low of the day. So a call play is a little trickier for me as of this morning right now. Chart-wise, monthly. Yes, it was a very ugly finish, but the bottom line is we're one time framing up for 3 months. We still have the gap. Remember, we have gaps in all 3 time frames still. So they're all still pretty healthy overall, although some damage has been done. So right now the monthly, one time framing up, gap still holding, right? Sellers need to take out last week's low to really start changing things in the longer term. Weekly, yes, we're in balance. Bottom of the balance are those numbers I just gave you down around the 320 levels. If we hold those, right, we're going to at least start coming back up, test those single prints, and if they ever get filled, then you start your march up towards the trend line, right? If you fail at the bottom of a balance, eventually your destination is the top of a balance. Although this is going to take more work because we have 2 trend day downs and the trend line to get over. And then on a daily, same thing. Down, one time framing down 2 days, bounced off the 50-day moving average, very nice on Friday, and continuing so far this morning. The odds of an inside day, where we're based on where we're trading now, are going to go up once we open. You should get some decent chop inside of here. You will get opportunities. If you don't want to do anything in the first time frame or so, no harm in waiting for market-generated information to form. Have a great day trading, and we'll recap at 4 p.m.